Good morning, traders. Let's wrap up the week here. We're excited, of course. It's another Friday. We're going to take a look at Apple bouncing back after seems like Morgan Stanley analysts came out and talked about how much it would actually hit revenues. DocuSign earnings, RH earnings, Smith and Wesson. We'll take a look at Kroger's. You guys let me know as soon as it hits the tape. It looks like it might be coming out any second now. We'll see what happens there. We'll get into some notable ratings today. We got Snowflake. We got First Solar, Adobe. Have you guys seen Hurricane Lee? And we'll take a look at the preview for next week's earnings. There's still some stocks that have yet to report. Smash the like if you guys are ready for pre-market prep. We got Jeremy Schwartz, our guest today. Let's get right to it. It's pre-market prep. Rise and shine, team. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, traders, let's take a look here and see what we're seeing. Of course, the SPY down a little bit here. I got it about 66 cents overall. Let's take a look at the Qs. Qs also down about 70 cents here. We'll look to see if we keep leaking a little bit of a bounce back yesterday, but one thing that I'm noticing is that we're not bouncing back as quickly as we're going down now. That's a sign that I definitely want to talk to about with Dennis Dick coming up. Of course, TLT also dragging. We'll see if it takes out that 93.50 today. Doesn't look that great. USO, of course, we'll keep an eye out to see what happens in crude. Can this continue to climb? Of course, I watch WTI, going to focus to see if it gets back over 88. This morning, I see 87.43, a range to 87.52. So let's see. If we go back to the 88.90 handle, where will these energy stocks go? We'll talk a little bit about that. Gold, of course, has been on the pullback, bounce back for the second day, and really wasn't the biggest bounce back. I'll see if that can get back over 179. I'm looking at GLD here. Silver overall still has been declining. A little bit of a turnaround signal yesterday, but we'll see if that can actually turn around or not. And then, of course, we'll take a look at Bitcoin. Bitcoin, we'll see what happens with it overall. Let me see how it's doing because I have it here on Pro here on the right-hand side. You see, even TC doesn't have Pro, doesn't have Bitcoin. Bitcoin right now down about 1.7%. I see it around 25,810. That looks like it keeps going down. We'll see what happens there in Bitcoin. Let's bring on Dennis Dick. Let's take a look into the market, talk about yesterday's action. Of course, we got a little bit of a bounce back, but like I was mentioning, Dennis, it feels like we're going up slower than we're coming down now.
Markets, but let's get to what the real talk should be about this morning. Right here, baby. Detroit's back. We're back here, Money Mitch.
But you're not in Detroit, Dennis.
I'm basically born and raised South Detroit. So even though I'm Canadian, Windsor,
I gotta mess
right
with you a little bit on that.
So
You're across, man. You're across.
We're South Detroit. We do the Journey song and we sing it. Born and raised in South Detroit. That's us because we're south of Detroit. We're Windsor, kind of east, but we kind of say we're south.
No worries. Dennis, this year.
One question to you, Money Mitch. We just beat the Super Bowl champs. Does that mean the Lions win the Super Bowl?
Well, don't get ahead of yourself there. Don't get ahead. I was just about to give a positive comment on Detroit, and then you had to kick me that question, Dennis. Come on, man.
Maybe putting the cart ahead of the horse.
Yeah.
Just a little bit.
I'm here finally going to talk positive about the Detroit, and then now you're going to give me that one. But I'll tell you guys, I was looking for them to win. Usually, right out off the start of the season is when you see a lot of upsets. Why? I think that has to do with more about how coaches push training camps, and I think that they've been pushing on Detroit like this is our year. Everyone's thinking it. Of course, the Chiefs just got off the Super Bowl. They've been kind of taking it easy. Didn't have their best tight end It seemed like an easy setup for Detroit to win. Now, let's see if they can just take the division. That's what I'm focusing on. Take the division.
It's an easy division.
Get into the playoffs, and then we'll see, right? Because that's the way I feel, like always. Teams get hot in the playoffs. You never know what can happen. Do I see them taking the Super Bowl? No, but they could go deep into the playoffs. They could go deep
we just
into the
want to win
playoffs.
another game. We want to win one more game. Feel like it's been like 30 years since we've won a playoff game here. So we want to feel like what it's like to win a playoff game here. So,
well,
anyway,
I was at least talking about it yesterday. I expected them to win, and whoever made those nice little bets out there, because I'm in North Carolina and can't bet. Shout out to you guys. All right,
let's get to all you Lions fans. Okay, let's bring it back.
Shout out to the DKNG traders, right?
Oh yeah,
not you and I, at least though. We didn't catch that trade. Look at that.
I can't believe I'm so mad. I missed that one. Just 25-10. I had the order out there, sitting there waiting. Come to daddy. Coming into football season.
3%.
25.41 was a low. I missed her by 31 cents. A
nice little 23% winner. And I was talking about this trade. I screwed it up by going after Penn and going after MGM that have not done anything.
Go with the
Wrong
leader.
Ones. Go with the leader, right? Sometimes you're going to get screwed by not going with the leader there. I definitely got hurt. But let's talk about our leadership. Let's get to Apple. Of course, Apple bouncing back a little bit yesterday. And it seems like Morgan Stanley came out and said that the China iPhone bans would mostly hit Apple revenues by about 4%. Of course, this was just a ban on government office, not like a whole ban on China. Now, that would be a whole nother ball game, right? But what do you think now that Apple's had a little bit of bounce back?
I think it was oversold. We talked about it yesterday. I still think I'm not putting in the long-term portfolio. I still don't get it, even though it came down to 28 times earnings after the fall. I still think it's relatively expensive. But, stocks just don't go straight down. 190 to 172 in 24 hours was a big move. Came right, bounced off the support that we had made in previous, just a couple weeks earlier, where we got down to the 172 area. So we bounced a little bit higher than that, 173. I tried the Nvidia, didn't quite get it. I was hoping it was going to go down all the way to the 450. Had my order sitting out there too, much like the DraftKings. I'd had it at 450.5, went to 451.5. Sometimes you just got to pay up. But the problem is, like, I place these orders and I'm doing other things and I don't get back to it. And then you look back and you're like, I just missed that one. So missed that one too. But I think it was predictable the tech would bounce a little bit yesterday. I think, again, what I've been saying, I think we're going to be into a choppy environment where you get 3-4% moves up, you're taking profits, 3-4% moves down. Maybe you're rebuying stocks if you're a long-only trader. If you're shorting the moves when they're up 3-4%, and then maybe bringing them in when they come in down 3-4%. I think we're more in for a range period, as opposed to like, we're going to be up 20% by the end of the year from where we are now, or down 20% by the end of the year. Why can't we be right here at the end of the year?
Well, I'm going to still say it might be the banks that do it to us, because I just continue to see those stocks just not get the lift. And that would be my concern, right? On continued downside coming in. And we'll see what happens. KRE now at the bottom of our head and shoulders, starting to break. And this is what I'm looking for. I'm just keeping an eye on that action, because this is the only thing that I feel will break the market, right? Like, I don't see too much negative out there. Of course, we know that
Well, China's always a wild card, but yes.
Yeah, well, that's always been the wild card,
they already
right?
did it with Apple. Look what they just did to Apple on us.
Yeah, that's always been the wild card. My thing is, we know on September 20th, we're going to get another kind of Fed rate, but what's going to happen? They're going to do probably a pause on that meeting. So everybody's looking towards November as maybe the next potential hike, but that's all the way in November. We're in September, guys. So that leaves to me a room for positive outlook to come into the market, because the negative would be, okay, yeah, they raise rates again. But other than this, that's why the only negative I see is the banking situation right now. Other than that, I think that's what's holding back people buying up the dips in tech and seeing another rally. We'll see what happens with those names. I know
never really, and one thing to say is usually it's hard to predict the next, major catalyst that's going to knock markets down. It comes out of the blue, and it can be anything. It can be an earnings warning from somebody. It can be, really anything coming out. But, that may not happen either. Like, it might just be And that's what I keep saying. We don't have a lot of catalysts here, and we don't have a lot of upcoming catalysts. It kind of makes me think, why not shop around? Why not just beat up the longs and the shorts? People who are like, oh, it's breaking out. Oh, no, it's going down. I got to stop out.
Yeah.
Oh, no, it's breaking out. Oh, no, it's going to stop. I think it's a good environment for that. So I think the setup is there for us to go sideways for a while.
I agree. That's actually a good outlook there, Dennis. You're even changing me a little bit as you say it. Let's go to Docu.
Sideways for the win. Lions and sideways.
DocuSign, this was the hot stock in the pandemic, right? Let's see if it's still hot here. Q2 EPS at 72 cents beats the 66-cent estimate. Sales of 687.7 million beat the 677.56 million estimate. They did authorize an increase of 300 million to repurchase program and sees Q3 revenues at 687 to 691 million versus a 686.03 estimate. Also, their revenue outlook on the low end, right by that estimate, high end 2.737 billion versus 2.72.
Sneaky value stock all of a sudden with those kind of earnings. 72 cents, extrapolating if they could do it out 4 quarters, $1.50, $3, things trading like 18 times earnings.
Yeah.
Problem is, it's like a Zoom and the one trick pony. We all sign our documents. We all use it. I used it a couple days ago, so it's used continuously there. It's just like, I need something else. So Zoom, DocuSign, same type of stock. Cash
Here's my
flow
question,
is now
Dennis.
coming. Yep.
Well, when you went to sign that DocuSign document, did you pay anything?
No, I know. How do they make money? That's a good question.
Now
they make money. Look at the money though. There's
Dennis.
72 cents, so they're making money. It's
my
got to be
question
the
there.
use of it on the other side, though, right? Like
Exactly.
the client isn't paying, it's going to be the
the
customer
person,
on the other
the
side.
person writing the contract and having
Yes.
it signed.
Yes,
So
but the customer, I've signed lots of DocuSigns. I've never actually had to pay DocuSign $1, so it's only the person that's putting it up there.
Yeah,
The
no,
contract,
definitely.
the
I
person
think it's
drawing up the
interesting there.
contract.
Yeah, I think it's interesting there because we all use it and then we don't really think about where the revenue is coming from.
It's coming though. I mean, that's impressive. 72 cents. That's real money. They made real money.
I wonder how big this is in AirKK. I think it's in there. I'm going to take a look right quick as I take a look here.
She's crazy. Well, actually, it makes money. She probably doesn't want it anymore. When they start making money, she throws them out. She don't like that.
Yeah, that's no longer growth to you.
Nvidia starts killing it. She's like, I get rid of that. She likes future growth. She doesn't like current, money. Anyways, that's a joke.
Oh man, I'll tell you one thing. I'm not seeing it in the top 30 holdings, so maybe she did get
she threw it out because it's making too much money, Mitch. She's such an interesting person.
Hey, we'll take a look at that. Definitely
turning profits, cash flow positive. Well, this isn't the kind of stock we're looking for. Get that out of the portfolio.
55 just stands out to me, just obvious on this chart. Recent high Thursday, you got 54.99. You got it on July 19th, 55.28. Get back through that 55. If we were able to do that, we're looking pretty good. And where does the pre-market spike to? Right there. Let's see if we get back up above 54 and make an attempt to 55 today. I'll keep an eye on Docu. Let's go to Restoration Hardware, who is not at least doing things for their houses anymore, because it seems like nobody is. Restoration Hardware Q2 EPS $3.93 beats the $2.56 estimate. Sales of 800.48 million beat the 784.9 million estimate. They did say on the earnings call that we continue to expect the luxury housing market and broader economy to remain challenging throughout full year 23 into next year as mortgages rates continue to trend at 20-year highs, and the current outlook is for rates to remain unchanged into Q2 of 2024.
I don't know who can afford their stuff. It's high end, but I just went to their site just for fun because I've been in the stores before, and I was like, I remember going to the store and like every couch is like $4,000. It's like, nah, not for
Holy
me.
moly, man.
So literally I go on the front page, just rh.com, go to the front page. You should show this, Mitch. First thing you bring up, you stop at these chairs. They're like fabric dining chair. Guess how much the one fabric dining chair is? One. Guess how much? You're lucky.
How much? I'm looking at it. I'm looking at it.
$795. for one
Good
share.
Lord.
I don't know how anybody affords this place, man. It is
Did
crazy
I get the right
expensive.
one
Look
here?
at it. But if you're a member, you get $200 off. So you got to become a
Oh,
member. So
oh,
members get $200 off. It's like Costco, except everything's expensive at this place. $795. That's a nice looking share, man.
I got one word.
It's a beautiful chair.
IKEA.
I know IKEA, so I wanted to like my wife need to send her here. I don't send this to my link. Don't let my wife see this show today because I don't want to pay this kind for chairs. But
Look at this couch, man.
$795, man. Ooh.
It's a cloud, though. You get to sit on
Oh,
the
is that
cloud.
Canadian? Am I on the Canadian site? Oh, is that Canadian? I think it was
Oh,
US.
this is
I think it was on
US.
the US site.
Yeah, this is US.
I think that's a US site. I didn't even know we had RH in Canada. Wow. Woo.
Holy,
that's a nice chair. That's a nice chair.
It's guaranteed for life, but it has an asterisk in the
Nice
corner
chair.
there.
700. So honestly, you're never gonna buy less than 4 of them for your dining room. So you got $3,000 worth of 4
Holy
chairs,
crap.
and then you probably, if you have a bigger dining room, you got to need 6 of them. Holy
I'll tell you
mackerel,
what,
man.
you might need to live in a place like this.
That's where you need to live for that stuff. But you know what? I don't understand the stock. I've joked about this for a long time. It continues to go up. So people find that money. But you know what? Maybe the margins are just huge because when you're selling a share for $795, I guarantee you they ain't paying $795. So maybe they sell 1 or 2 shares. They pay their monthly bills. Day by day says he says I would pay. I'm with you, Dave. It's a beautiful chair. I wouldn't pay it, but man, that is a nice looking chair.
$3,000 is a used car.
That's a used car. This is 4 dining room chairs at RH right on their front page. This is the deal. This is the weekly deal.
Yeah, nah, man. And I think that one thing that we should talk about here, right, is the unchanged until Q2 for 2024, right? Prolonged interest rates. Yesterday we got Dallas Fed chief Larry Logan showed up with the Hawks and said that there was still work to do. A lot of people are thinking about now, it's not necessarily, how much we're going to climb higher, but how long will those interest rates hold at these high levels? Of course, RH is thinking now Q2 of 2024. What do you think here, Dennis, at least for unchange of the rates?
Here is the issue with RH2 is that these are fine. When you're buying $3,000 for 4 chairs, or even more than that, $3,200 for 4 dining room chairs, they finance in that. So this is an interest rate problem too. And we have seen what has happened in the last few months is that all the plays, like all the retail plays that take interest rates into account, meaning you've got to finance your purchase, have been destroyed. Cars, GM, Ford, destroyed. We've had talking about, we've talked about the home builders. The home builders starting to come down here a little bit too, but they've been pretty resilient. Not so much in the last month or two. But we've talked about solar plays, ENPH. That just continues to get destroyed. These are financing plays. Anything you got to finance. People don't like paying 7, 8, 9% to go buy the stuff, and they maybe can't. So, that's the issue too, is maybe they can't afford that. So I think anything that's high end like that you're financing, those are obviously becoming now a victim because the interest rates have stayed up for too long. So if the interest rates do stay high, just because they're not stop raising doesn't mean they're going to start cutting right away here. Those type of plays, like the RH types of plays, those aren't the types of stocks I want to hold. Not in a high interest rate environment, which is what we're in here right now.
Yeah, we were talking about it earlier in the week when we were talking about it with new cars, right? And how the average sale of a new car was $700. That is because the interest rates. It's not because the cars are worth that much. It's paying 7, 10, sometimes higher than 10% interest rates on these vehicles.
Yeah.
When we used to get, like your average lease, if you had good credit, maybe
remember 0% financing.
Yeah, 0.
That's
even
gone,
0.
Long gone.
Yeah, that's
0% financing. Everything was 0% financing. Why not finance it? It's 0%. Those days are long gone.
Yeah, definitely long gone, and I don't think they're ever coming back. At least with the way
not
that things are
anytime
looking
soon. So people are speculating that a year from now we're back down to 1% interest rates. I don't think so. I think they could come down and start ticking back down a bit. I think we are at the peak of the cycle. I don't think they're going much higher from here, but I think they could stay up here. And if they stay up here these are not the stocks you're looking for, as Yoda would say.
Smith and Wesson.
Ben
Getting
Kenobi. Ben Kenobi would say.
Smith and Wesson brands Q1 EPS 13 cents beats the 5-cent estimate. Sales of 114.2 million beat the 100.93 million estimate. They jumped on sales as profits exceeded expectation here. Getting the lift. Can it get to 12?
Man, but here's the problem. This stock in the absolute gutter, overhead supply abundance, meaning just everyone has been down. Everybody who has bought this stock is basically, and again, okay, maybe if you bought in October of last year, you're up in it, but this was $35, $38 back in 2021. It's $10 here now. There's just overhead supply. Everybody, this is going straight down to the earnings, so I had the low bar. Now you get the snapback rally. This thing just ripping to $14, $15? I don't think so. I think you'll struggle at 12. So I think where it's at right now is kind of where I'd be like, okay, thank you. Give me my money back. I want out.
Yeah, sideways action. Smith and Wesson. You can see the chart. Just the chart's telling you. It's only gone up pretty much one time. That was in the pandemic. Other than that, it's a sideways looking chart, right? Like the way it traded here, it's the same way it's trading now, just sideways. So I'll stick to the chart there. It's not changing much. Gilead prices in here a 2 billion secured senior unsecured note here, 1 billion of 5.25% here. Senior note maturing in 2033 and 1 billion 5.5 in 2053. And then B of A Securities upgrading Gilead Science to buy and raising price target to 95. This has come back a long ways. And I kind of like this 75 area. If we could really start recovering it. What do you think here?
It's always been the buy in the 60s. When Gilead ever gets to the 60s, it has just been a moneymaker. This is a stock. There's some stocks you like trade well and invest well with. This is just one of those that I always do good on this stock. I don't know why. It's just kind of my stock, especially from a swing trading perspective or a long-term investing perspective. I've bought this in the mid 60s multiple times and made money every single time on it. So it's a sell in the 80s, a buy in the 60s. That's been going on for 7 years on this stock. Look at this long-term chart. 7 years. Look at all the circles he made in the past. That's all the support down there in the low 60s. This stock gets to the low 60s, you buy. I don't buy it at 75. I don't buy it at 73. If it can hang out and do whatever it wants. But when it gets down to the low 60s, I strike because this stock has always been a buy and always done me well when I've bought it in the low 60s.
Yeah, I remember when we were watching it get out of this consolidation. Now it's kind of more of a matter of can it hold this gap on the daily? That's the only. Hold on 1 second here. I'm about to sneeze and I'm like, no sneezing on stream. Let's go. Let's keep it going. Gilead here. Can it keep that shadow zone? And I call them shadow zones. You can call them gap, whatever you want to call it. Right here into this zone right here. I could see it holding that and maybe starting to make its way back to resistance. But the only thing is drug manufacturers have not been the place to be as of late. That's where it gets concerning. I've seen like Merck just barely hanging on. Lilly's the favorite, right? That doesn't want to turn around, and one that will always regret, Dennis and I. But I don't see that turning around. Pfizer has been not the best. That continues on the downside there. And then Johnson & Johnson, we know the issues that are like holding that one back. So
yeah, and
that's where it gets
about
difficult
this.
about
We've
Gilead.
been right about Johnson & Johnson. I'm going to keep saying it. 170s, like holy mackerel, gave you so many chances to get the hell out of this stock. It's a premium valuation. It's stretched even under its own metrics, and then they got the talc issues that aren't going away. So I've been saying 173, 172, 170. You can go back and listen to shows that I said this is the stock I hate the most in the markets. It's down 10% from where we were talking about that 3 weeks ago. That's a big move for J&J. Come back into support here now. So, it's a logical place for it to bounce as long as there's no other talc issues. But you get back up to 165, 170. I don't want to own this thing.
Let's get to the next rating. Let's go to Snow. This one's interesting. D.A. Davison initiating coverage on Snow with a buy rating, announcing a target of 200. We were talking about this earlier in the week, and just to kind of do the correction there, right? I made the mistake of calling them more of a cybersecurity stock. Dennis corrected me. But of course,
They
they're
do sell some
more of a,
software to cybersecurity companies, though.
exactly, more cloud space for those companies.
Cloud. It's
And-
cloud.
It's cloud. But now that we're starting to get above this level here, this was the level that I was looking at, 161.93. Now we're starting to get above that. I'm looking for any pullbacks into this zone to maybe get a shot there on Snow, because it hasn't gone at all in the rally. I mean, you're trading at the same levels that you were back here on what, June 6th of 2022?
Yeah, that's one thing, and I actually do like this rating as well. I did buy it last night on the rating. It came out
Nice.
last night, and obviously has popped up significantly. So I've already sold it just into the money from the rating.
I'll take it.
Yeah, I'll take it, but I might rebuy this today, so I'm just still watching this one. So I don't have a position at this time. I sold it just before the show started, actually here. So I think if it pulls back a little bit off this, though, I do think this is room to 170 here. So I like the key reversal yesterday off of it too. Sneaky key reversal where we made a new low and then we turned around and closed a new high from the previous day. So I like the setup here. I like the call. I'm not overly bullish the market here. We know that right now, so it's hard for me to get super excited about it. But I think there's room to 170.
Yeah, I think you just got to see if we're going to go back to some growth names, ARKK names. Have a good day. They didn't do too bad yesterday. We'll continue to watch Snow. It's definitely on my radar. It's one of my top stocks to watch. Let's go to First Solar. We just talked about a lot of the solar industry. They've been dragging, but First Solar getting a little bit of a lift today as Deutsche Bank's upgrading First Solar to buy and raising price target to 235. I think this is definitely stepping up to the plate when you look around in the industry. And Dennis just talked about it. They've been dragging, and it hasn't just been because of also like kind of loans and stuff like that. They've been giving us some bad news. They've been giving us some bad fundamental outlook. That's where it gets confusing. But hey, First Solar definitely being the leader here.
I don't understand why it gets the pass. I guess it's the businesses. I don't know enough about them compared to ENPH and SEDG and some of the other solar companies, because this one has just gotten a pass. It's obviously best of breed here now. So that's the good news. The bad news is this whole industry is in shambles and interest rates are killing it. I don't know for solar how much, the financing, maybe it's just set up differently or the financing plays aren't as much here. I'm not sure. But I can tell you it's killing ENPH. So there's obviously some differences here. It's a nice pop. It's a stock that's in the gutter. It's a contrarian call. I always respect contrarian calls, even if I don't agree with them. Nice support in the mid 170s, so I can see what the analysts are looking at, all that support. So they're waiting to upgrade this and timing it. Is there room to 190 or 200? Yeah, there's room up to there, but I think there's easier money. I'm going to take a pass.
Yeah, I could see them coming after this kind of gap zone. They're just relying on this gap zone to hold in here. And as long as that gap zone holds, it does look like it could come right back. One thing that I see is 1, 2, 3, and then this attempt here. You can't get back towards that 213. I think you eventually fail this pattern. But of course, it is trying to come back today. Let's take a look at the hourly outlook. You can see it's starting to come back. First levels that I'd be looking for. Can it recover 190? Pre-market high already there at 186.57, 186.75. We'll see if we get those levels. That's First Solar. Adobe, one that I've been talking about since, it's crazy to think so, but we mentioned this stock down here, guys, and I'll show you guys it. I still have the outlook there. Right here, when we went through this 380 spot, that's when we were mentioning it as potentially AI stock. Now that is 46% higher. And then Mizuno coming in here, upgrading Adobe to buy, raising price target to 630. 630.
It's a breakout. It'll be a breakout if it can get above 570. Is a rating that is obviously momentum based as opposed to the one we just talked about here. It's come a long ways. I mean, a long ways back. I mean, I just think Mizzou was a little late to the party here. Money Mitch with a great call, a few months ago or 6 months ago when you were talking about this.
Yeah.
Now you're looking at it. It's run a long ways. So does it have room to 600? Probably, maybe. Is it got momentum on its side? Do all the Momo traders like this stock? Probably. I just think we're in a choppy environment. The stocks come back a long ways. I was like, I think I'm going to get it at a better price.
Yeah, one thing that I talk about Adobe is when you look at AI names, how did I find that Adobe was going to be one of those names? All I did was started looking into like videos and YouTube. And then I saw like out of nowhere, it was like 20 videos being made on Nvidia's AI that they had just recently released. I didn't even catch it from Adobe. I caught it from the creators and showing that they wanted like to actually use it. And that told me enough. All right, if the creators want to use it, it must be good here. So that definitely gave Adobe the continued lift. And I'm looking for more companies like this. So if you guys see anything like that, let us know. You guys can always reach out to us, give us some feedback, shows at benzinga.com. We're always here for you guys. 831. We'll see what happens in a little bit here. Keeping an eye on the market. Let's go to one last outlook that I wanted to talk about, which was the hurricane trade here. GNRC, could we get some more Generac lift that they're just recently pulled back? Hurricane Lee out there. And I do have a little bit of a picture. It seems like this is the fastest, at least the storm picked up 85 miles per hour in 24-hour period, which tied Hurricane Matthew for the third fastest rapid intensification in the Atlantic. And you guys see the outlook here. What are you thinking about the hurricane, Dennis?
It's a scary picture, but if you actually look, it's just a scary picture because it's supposed to go straight north after. So they're looking and the media's got her like that, but then she's going to go straight north. So they said very unlikely this is going to hit land anytime soon. If it does hit land, you're looking at the later next week, but very unlikely that this is going to hit Florida. It's going to go farther north. They were actually saying like Nova Scotia. So it's going to take a path straight north is what all the projections are showing. Lucky because this is a monster hurricane and it went from like a tropical storm to a 5 so quickly here with the winds somewhere up towards 160 180 miles an hour. So if this was hit land, this would be absolute disaster, but it looks like we're going to be safe from this one. It looks like the projections, at least at this time, are showing that it's not going to hit Florida and it's not going to hit Georgia and the Carolinas, probably going to go farther north. So we hope they keep that projections there, but keep an eye on it because those projections can change.
Now, I'll definitely be watching how it affects Generac. Do you think it could get a lift the stock off of this?
I don't think so. The reason being is that it's just so far out, and I'm still long Generac. And you know what I really missed here is this is a financing play too. And we've been talking about these, and I think this is one thing that moves with home builders. And I love my Generac. I still think it's a great company, but I think what's holding it down here to a certain extent is these our generators are really expensive. Mine was $14,000. So, I mean, people are financing these things. And when 7% or 8%, they're like, maybe they can't get the financing to do them. So people, it might be a little bit discretionary too. It's like, I'm going to hold off getting the generator. As you get hurricanes, more people buy generators because they don't want to see the power go out and they don't want to see sustained, out for a while. So, as you get, I think there's still, as, the global warming, if you've got all that, you think that's going to continue. I think there's still a case for Generac in your long-term portfolio. But what's holding it down really right now is higher interest rates.
All right, guys, at 8:30, we did get some news to come in here. Let's see how it affected the market. I do want to at least give you guys those economic data as it did come in here just a little while ago. So let me go ahead and pull that up here for you guys. And let's take a look at the SPY, see if there was any reaction. You can see where it's starting to come up a little bit here. At 8:30, we did get here New York Empires. I'm pulling it up. Just give me 1 second here, guys. I'm having some issues grabbing it right now. Let's go ahead. We'll go to our guests. I'll pull it up for you guys, and we'll talk a little bit about it with our guests as we bring them on. Let's go ahead. Let's get to Jeremy Schwartz. Let's bring our guest on. Jeremy Schwartz, Chief Investment Officer at WisdomTree. Welcome on. How we doing?
Good to see you, Mitch. Dennis, good to be with you.
Definitely good to have you. Of course, recently we've seen Nvidia go up and it looked like it wanted to take out 500. I know you've been keeping your eye on Nvidia and you even put out a really good outlook on some statistical data looking into Nvidia. So let's talk a little bit about what you've been seeing, and I'll throw up here in the chat so that everybody can take a look at this tweet that you put out. And you guys go ahead and give Jeremy a nice follow also after you click that Twitter.
Thanks, Mitch. I mean, this was one of my more viral posts, and I think it hit on the sort of stock of the moment. I mean, all you hear this year, it's been the year of AI, it's been the year of Nvidia blowing out numbers, and this week, obviously, it's creating some controversy with the analysts and some other Twitter follow people of what's going on there. I had just done something on valuations, and what happened is, Nvidia became the highest multiple stock in the S&P 500 in March. We were looking at price to sales as one of those key indicators. And it was sort of 40 times trailing sales, 25 times expected sales. And we started saying, once you get to this level, what are the odds of future success? And when the bottom table shows the relative returns of the stocks that got to these various levels of price to sales and their forward returns. And again, this is, if you use trailing numbers, you're looking at the bottom row, so greater than 40 times. Only about 150 companies in the last 60 to 70 years got to those levels. It's pretty consistently, once you get into these greater than 25, the odds of success of any of them over the next 12 months was roughly 20%. So 4-to-1 odds stacked against you. But you look out 3 to 5, 10 years, and it's consistently always less than 10%. So 90% of all these companies sort of fail to beat the market looking ahead over a longer term period, 3, 5, 10 years or more. And you look at these annualized returns, I mean, the median differential is down 30% relative to the index over the next 12 months. When you look at a 5-year number, down 20% a year versus the market. I mean, that's extreme. It's not an easy chance, is what we'd say. And the question is, today it's like the prime AI stock. You need chips. There's all sorts of people who are buying these chips. Then the question becomes, what's the competition in the future? Are they going to be the only ones? It's clear people see their success and are going to be gearing up to do that. And you might think they have a impenetrable moat, but you look at the lessons of history when companies get to these valuations, competition comes in.
Yes.
We were reminded of Cisco. Everybody's been talking about this, Cisco versus Nvidia.
Is Cisco one of these companies? I was going to ask that question. Are they one of these companies that got to the crazy valuation, and then are they in this data set?
Oh, yes, for sure. I mean, they were very similar multiples back in 2000. And, what it shows, we did a follow-up piece on that, Cisco versus Nvidia, and you look at the data on Cisco, and they did from a sales perspective, they did grow consistently more than the S&P for the last 25 years. For the first decade, it was at triple the sales growth rate. It was something like the S&P grew sales from 3% a year. They grew at 10% a year. But the sales growth needed when you get to the 30 to 40 times, Cisco, as people know, is still negative, absolutely down since 2000. I mean, it got to like 80, and it's still down from those 2000 highs.
Yeah.
And the S&P's up 7% a year from the 2000 highs. So it's a hard threshold to get. Now you say, who got there in 2000? Amazon. Amazon was not a cheap stock, but it's grown sales 30% a year. So the question is Nvidia more like Cisco, or is it more like Amazon?
Oh, that's a great question. That is the question here. And I think it just goes to show you, like, chasing performance. Like, there's so many people that are like, oh, I've got to own. And back, if you went to 1999, 2000, I was trading back in those years, and I can remember people talking about Cisco. Cisco, CSCO, was the most valuable company in the world. It hit a $600 billion market cap, I remember. And everybody's like, this is the stock you have to own. It was like the 4 horsemen. Remember the 4 horsemen was Cisco, Dell, Microsoft. Who was the fourth? Do you remember, Jeremy? I can't remember.
Was it AOL or Yahoo? I mean,
it could have been. It was Cisco, Dell, Microsoft. Help me out here, chat. What was the other one that would? It wasn't Apple. Apple wasn't big then. Cisco, Dell, Microsoft.
I would have thought AOL maybe, or Yahoo.
It might have been Intel.
Could be.
It might have been Intel. But anyways, it was like the 4 horsemen of tech. And it was like something Kramer always talked about, the 4 horsemen. You've got to own the 4 horsemen. And you know what ended up happening, obviously, was Microsoft went into a 15-year bear market where it was down for 15 years before it actually recovered. Cisco never recovered. Intel never recovered. Dell did recover, but Dell went private and reorged, took everybody out at the lows, which I complain about forever because they bought out the stock and took the whole thing private like $12, and now it's obviously, you look at this thing at $68 and you think like, wow, they took me out right at the lows. So I mean, just chasing those four horsemen, it's kind of like FANG today. So you wonder the similarities here, where everybody's got to own these stocks and everybody's in everybody's portfolio. So you just wonder if those similarities couldn't happen here again, Jeremy. I love this analysis here you're giving.
Yeah, no, I think we're believers in the tech. We're believers in AI. I mean, I think it's absolutely going to be a key focus. And then just because what's in the price and can they live up to it? The higher the multiple, the higher the expectations are to deliver. And I think it's quite interesting that, again, they blew out numbers, but the stock, in the after hours, it did okay. It started rising in the after hours after they do it, but it's lower. I mean, it's $50 lower from where it was in those after hours sessions. So it shows you that even when they have a blowout number, it's not easy to maintain the momentum. So and now there's all sorts of questions of what drove that blowout number. I don't want to speculate on how much of that is real or not, but I just know once it gets to the high numbers, it's really tough to beat.
Is there a path for Nvidia that could, not go with this analysis, and it is Amazon, and this thing just grows earnings exponentially at 30% a year for the next decade, and we're looking at this thing as $1,000 stock? Because a lot of people are giving that case. Do you think there is a path for that there, Jeremy?
Well, 10% of these companies do. So
10% chance. So you're telling me there's a chance.
10%. My own money would be on it being more like Cisco than Amazon. I'm more in this going to invite competition. This is not quite the scale business. I mean, you can say it's a monopoly business today. Nobody's competing with them, but I do think it is the prime focus for the next decade. Is everybody who's doing anything in chips is going to be coming after this. So I'm definitely not convinced it is Amazon versus. I'm more convinced it's Cisco.
Well, a quick one here, Jeremy. I wanted to ask you, how would you compare the AI hype to the .com hype?
It feels similar. And now, and in a way that the internet has transformed what we do. I mean, and you could say we've lived up to all the hype of how it's transforming the economy. And I'd say mobile penetration has probably surpassed what you thought it was going to be back 20 years ago. And yeah, well, AI become ingrained in everything we do everywhere. Yeah, you could see it taking more and more adoption. You could see how people are going to use it more. I mean, it's super early in what people are doing with it. And yes, it'll transform how we do things, how we do business, and all the rest. Maybe not quite as transformative as the internet in terms of just accessing the global knowledge, but maybe maybe it's hard to see today. But I'm a believer in where it's going, but it doesn't make me any more excited to just be a pure Nvidia as the only play for it.
Yeah, and I know that you've also been taking a look at an area that I've been a little bit concerned about, which is the banks, right? We've been seeing the downside action. I know you're pointing at something different here, but what are you seeing in the banks, Jeremy, that maybe we should keep an eye out for?
Yeah, I mean, this is one I tweeted. Bianco's been doing a lot on what he calls the bank walk, which I fully agree with. That I think the banks are in a very tough spot in one sense. Is they have 15 trillion in deposits, and they're really not paying anything on your checking account. It's kind of embarrassing, but they really can't afford to pay you the 5% that you can be getting in treasuries. And because they have so much in deposits earning zero. And so it's a cheap source of funding for banks, which is to pay the depositor zero. And they say, well, we have corporate clients who need to pay checks. Well, there's new tech, fintechs are coming out, and even we're working on something I call WisdomTree Prime, where you can eventually, I'm paying bills. I paid my Amex bill in WisdomTree Prime, and I'm earning in treasuries. And it's not a bank at all, but it has functions of spending by earning interest rates. And you can say I'm biased by what we're building, but I do think there's other things out there. We're not the only one doing this type of stuff that, whether it's money markets or others, are going to keep collecting the 5%. I think banks could see it's not a run. I don't think people have to worry about the safety of their deposit at the banks. I think that's clear that the government said they're not going to let these depositors go failed. But I think as investors in the banks, their cost of funding should go up. And so I think the profit outlook for the banks is going to be challenged for some time.
And people are getting savvy to it. I mean, you see that Interactive Brokers commercial all the time, from your brokerage standpoint there too. It's on there. You're getting 4.83% at IBKR, and then they're showing what everybody else is giving you, and it's next to nothing. And it's like, and they even say, don't let your broker rip you off. I mean, it's worse at the banking level. I mean, I have money sitting in those checking accounts, and if you don't keep a minimum of like 4,000 or 5,000, they start incurring fees. But I mean, why keep? People used to keep significant amounts of money just kicking around in there, and people don't do that anymore. Like, you got a big bill, I move it over, and then I'll move it over to pay the bill, because it's like I'm just foregoing all that interest there. So I think people are getting smarter about it and bringing those deposits probably down in those checking accounts, because it's brutal that they own zero when you're in a 5% environment. I mean, that's a significant loss of income there. So you think about every $10,000, it's $50 a year.
For sure. This WisdomTree Prime app is really cool. It's going to keep adding functionality. Right now, it's only available in 20 states, but we'll keep adding states. By early new year, we'll have hopefully a debit card that you can link spending directly to treasuries. I mean, that's a pretty hot functionality. It's still, right now, moving money from a treasury fund to the cash to then pay the bills, but it's coming soon, where it'll just happen automatically. And obviously, we're not the only ones working on these type of things, and it's going to get harder for the banks, is my short-term view. At least we're trying to make it up in the banks.
I just threw up there, you guys, WisdomTree Prime. If you guys want to check it out, there's the link. Go ahead and take a look at it. Let's talk a little bit about the Apple situation that happened yesterday. It seems like, of course, we got released that there's going to be some bans in government office. Do you think this could expand to more? And is there any concern for Apple in your eyes?
Well, this is not so expensive like Nvidia. I mean, you've got guys like Warren Buffett who are very concentrated. Buffett is not known to be, a bubble chaser, right? He is a value-sensitive investor, and it's a very large position for them. So this is not the same type of Nvidia level valuation, but a lot of people say at 30 times, it's not cheap. Now, our view on the China news is I am not overly optimistic on China and the U.S. reconciling. I think this is going to be a 5-year plus longer situation. If anything, I'm going towards emerging markets ex-China. We've been developing more funds for that. Now, I think this current Apple news, one of my colleagues just came back from a trip to China. She has 20 family members in China, both government workers, non-government workers, in private and real estate, and all sorts of. She always has a lot of really interesting insights on what's going on. And her comment to me yesterday was, this is kind of an overblown story, that the government workers already weren't using Apple iPhones. So there's not much new news there, that they really couldn't use it before, that it's still viewed as a very strong, powerful device. A lot of her family members have the Apple devices there, and it's going to still be viewed as a luxury good for people who want those higher end phones. And if the tech stays better than all the other Chinese phones, then they're going to buy the Apple phones. But so in some ways, it's just the politics. That now the question is, will the politics get much worse? I don't expect them to get better now, and so I don't really think that long-term dynamic is changing. But I think in the short run, there may be a little bit more overreaction to this story, while I'm still worried about the long-term dynamics with China.
Do you think that we'll see continued manufacturing kind of get pulled out from China, as we've seen a lot of manufacturing move to India?
Yeah, and we saw there's some headlines going around that imports from Mexico surpassed imports from China. So the decoupling is absolutely, it's hard. Apple, Tesla, they're so ingrained in China, it's hard just to immediately pull back, right? So yeah, it's a very tricky dynamic. And people think about, hey, we're so intertwined, can we really decouple? But they need us, we need them, all these things. And I'm as free trade as it gets. I don't want all these tensions and frictions. It just seems like the politics are heading in a way where the only thing that's uniting Democrats and Republicans is to be anti-China. And so I think that geopolitical tension just feels like it will stay. And so I in a way, you could see more headlines coming, and it just doesn't seem this can be resolved quickly.
Jeremy Schwartz, Chief Investment Officer at WisdomTree. Check him out. I threw up his link there, and definitely give him a follow on Twitter. You see those great tweets. Don't miss them. Have a good one, Jeremy.
Thanks.
Take care.
See you, Jeremy.
All right, let's get back to the markets. How we looking here, Dennis? What are you seeing?
I'm just seeing a lot of chop here still. We did come back a bit here, buying the dip mentality was out there. We were down here overnight, came in buying the dip here again. You're not going to break that with a little, 7% sell off Apple. That buy the dip mentality is still there. But I just think, we're going to chop around. So, could we rally today? Could we get some of this back? Let's think about 50% retracements of the recent move. So we're SPY, we're 453, just doing the air math, down to 443, call it, so 10-point sell-off. 448, 449, 450 is probably major resistance here now. So we get up another 30, 40 handles from here, I'd be a seller of stocks.
We'll see. 50%. Exactly. I have it around 448.
There you go.
And then we'll see if it gets back there. I wanted to get to Kroger's earnings because they came in there. You guys can see the action right here. Kroger's EPS 96 cents beat the 91-cent estimate. Sales of 33.85 billion, missed the 34.13 billion estimate. Looks like they reached an agreement for a nationwide opium settlement to pay a 1.2 billion to states and subdivisions. They recognized a $1.4 billion charge in Q2, which would negatively impact GAAP EPS of $1.54.
Just nothing exciting here, really. You didn't see it. You got a slight earnings beat and the revenue miss. They don't really know what to do with it. It's selling off a bit. Is it going to get killed? Great support at 45. So it's a big level here from the last couple of days. Lows 45.06, 44.98. So that's your first level of support. I don't think they're going to turn around and just crush this thing today. I don't know if they're going to buy it back here. So it's kind of a nothing report and it's kind of a nothing reaction.
I agree. Nothing on that. And I mean, one of the things is it's already back to 45. If it was back through 43s, then maybe it gets crushed down. But I see that support with you, Dennis. Let's go to a little bit of some ticker time for you guys out there. Smash the like. Dennis, Dick, Money Mitch at it here. You guys throw up the tickers. We'll try to be quick. And the key here, try, but we'll do our best, team. You guys throw up some tickers. Let's take a look here. Someone saying Penn inside buyer again.
I did see that last night. Hit the tape. There's been multiple Penn inside buys. They're doing nothing for the stock. What a sell opportunity that was when that thing had the big pop up on the Disney deal. Just another opportunity to sell a stock that just can't find its way.
Yeah, I tried to swing it twice. I got hit twice. Strike two, and I said, you know what? I'm not going for strike three.
I had a small position. My wife's RSP is still in there, and it's just a disaster. Disaster stock.
Boeing. I did see some mention by I think it was Aerospirits that it wasn't a good news. Let me try to find that outlook here as you take a look at the stock. What do you think about the stock?
210,
Boeing?
Great support down at 210. You're not that far away from it here. It's kind of interesting setup here. You could also argue the 212. So you got some support in this area here. So I actually don't mind the Boeing chart here. I don't know though. Like, did it top out at 240? You look at the longer term chart, you wouldn't want it to break 10. So I'd say as long as it's above 210, bulls are in control. Below 210, I don't want any part of it. So if you're taking a shot, you'd stop yourself out below 210.
All right, so this was the headline that I definitely wanted to get to you guys on Boeing. So it came from Spirit Aerosystems. Of course, we've been seeing how they've been affecting both of course, of the jetliners, Boeing and Airbus. They said that the major supplier of the parts for the jetliners has asked Boeing and Airbus to absorb more financial pain caused by inflation that makes its contracts not sustainable. And this came from Spirit CEO Tom Gentile, and this was said on Thursday. So I'm wondering if this is going to really affect the stock. I mean, we've seen how aerospace, Aerosystems has really kind of affected Boeing in the past.
Yeah,
That's what
it's
knocked
just
it
with
down
the
here.
parts, though. I mean, that was the issue, was the parts that they were having the issues with were made by SPR. So I'm not so much worried about financing. I'm not so much worried about SPR own situation as long as they can make those BA parts. That's what we need to find clarity on, is, you know, this issue that they're having here, obviously with the SPR major part supplier.
Yeah, that contract's non-sustainable. I'm sure we're gonna hear something. Whether one of them is gonna pay more or other, we'll have to find out. Let's go to the chat here. What's the next one here coming up? Let's do Square. We've talked a lot about, guys. Let's do Meta.
55, 55, 55. It's the only level that matters. Look where it bounces yesterday, 55.14. This line of support is like the Rock of Gibraltar. If it ever goes 54, I'd get the hell out. But if, as long as it's still bouncing off 55, you can trade it from that level. I would say I'd definitely stop myself out below 54. Give yourself a little bit of room.
Meta, 300.
So resilient.
Can you hold
Just
it?
comes back again, continues to come back, sets up with a cup and handle. So not that we're big pattern traders, but you can see it there, Mitch, the little double like bottom there, little W cup and handle pattern there, which is usually a bullish sign. Question is, you know, if I've got this outlook of going sideways here, I'm not going to be playing a lot of breakouts and cup and handles and stuff. We're just not in this rip roaring bull market here. Sideways for the win.
See what happens on that one. PDD. Interesting. I'm keeping it rolling, guys. You guys smash the like out there. You guys are enjoying the show.
I like the speed.
PDD.
Issues. Somebody came out yesterday. Who was it? Was it Grizzly? I'm trying to think. Some short seller came out yesterday with a hit piece on this thing. Was it Grizzly Research?
Yep, you got
Grizzly
it. Right
Research. I'll just read you from their tweet. We believe PDD is a dying, fraudulent company that's shopping at Temu's cleverly hidden spyware. Oh, that's scary. That poses an urgent security threat to you. These are big allegations here. Stock got hit on that hit piece from Grizzly Research here. Obviously, we know they like to short these stocks and then come out with the hit pieces there. If this is true and there's spyware in there, that is scary. These are big allegations. I don't know if any of it's true or not, but Grizzly believes that is true.
I mean, I'm not going to go on the limb, but I would say that maybe a lot of China apps have some spyware on them.
That is possible.
But we does that change the outcome of the fundamentals? No. And I think this stock has been coming back as long as there's no more issues in China. And I'm still waiting to see what kind of stimulus they actually create for their economy. At some point, I expect to see some kind of stimulus. That's why I'm keeping an eye on these stocks, right? We'll see if BABA can get back above 100. I think that's definitely something to kind of keep an eye out. PDD, nice little weekly chart. I as long as it can keep this kind of inside week, not come back down below 90, I'd be looking for another takeout of 100. Doesn't look too bad.
I'm
BMY.
China stock still.
BMY. I'll day trade them. That's about it. Bristol Myers. What do you think here, Dennis?
I got a day trading position in it, so I'm going to limit my
that's
comments.
An interesting one. All right, I'll make a comment then. Just seems like it's been lagging as of late, but nice little support right around this level, 59.75s. Seems like it's been holding as of late. We'll see if this low holds here, 59.45. That holds. Maybe you get a little bit of a turnaround there on Bristol Myers. Let's keep it going. Let's do some more stocks. AMD, of course, we always talk about this one, but it's a favorite out there. Get to the chopper.
Oh, yeah.
Wants to take a look at AMD. What do you think? Is this a
I sold half
stock?
up at 114. I sold half of it. I'm still in the other half, trying to hold on. I do believe Lisa Su talking up a big game there too. That competition that Jeremy Schwartz was talking about for Nvidia, I believe is going to come from AMD. I believe Lisa Su will figure this out. I believe AMD will be a big player in AI. I'm sticking with the long-term thesis. The short-term trend has not been your friend. 110 is major resistance here. I'm not in love with the technicals on this. I'm just holding it on for the long-term story. So it's in the long-term account.
You know which one I like more than AMD, and I'll just go to one really quickly, was Intel. I had it earlier in the week. I played it to 37, sold it there, and now looking back at it, like, man, is this just going to take off on me? Look at this. In an environment where tech isn't hot right now, I'm looking for some stocks that are hot. Intel is hot, man.
Yeah, old school tech is hot. We talked about this. Spinner was saying it yesterday. Cisco up near highs. Oracle up near all-time highs. It was like four horsemen coming back here 25 years later. So Dell, look at the four horsemen: Dell,
Yeah.
Microsoft, Intel, and Cisco. Yeah, so they're all come
What
back
about
here.
IBM? Look, your IBM
IBM
starting
even
to
coming
get
back.
going,
All the
man.
old school tech. It's their day in the sun. Does the sun continue to shine on these stocks? I'm not so sure about that.
If IBM could get through 150, maybe you can finally reverse this monthly chart. One of the prettiest
I
monthly
sold
charts,
it out,
but
and
it's hard.
Yeah, I sold at 144, I think, a couple of months ago, 143, 144. And it was a good trade. We got in the low 130s. It was a good one. Just sold out too soon. I sold a lot of stocks when I started turning a little bit more bearish. I got up to down 30% cash in the long-term portfolio, and then I got nervous and I started selling out a whole pile of stocks. Remember, I sold my Airbnb, I sold half my AMD, I sold my IBM. I sold a few other ones in there too. I sold a bunch. I sold Oxy, kind of diversified selling. Just to, we had moved up. We moved up a long ways there. And I was predicting a pullback, which was absolutely correct because I was on, the end of July. And some of these stocks have pulled back from there. IBM is not one that's pulled back. It's continued to go higher.
I'll do one last one here. Fried Chicken Man 8 wants to talk about Disney. One thing that I did see on Disney is that there's been a battle, right, with Spectrum. They're in a battle right now over contract fees that spilled into the public. They were not able to reach an agreement, and millions of consumers across the U.S. saw Disney-owned networks like ESPN and FX go dark for Charter customers, right? And of course, you can take a look at Charter Communications at CHTR. Am I correct there, Dennis? I'm pretty sure I am.
Yeah, CHTR. The worst stock Disney is right now. It's just got all kinds of problems. We know ESPN. We know all the problems. We talk about this at least twice a week. It's a stock that I had in my long-term portfolio for a while. We actually played it very well off the 90 multiple times, made money on it all those times, which was good. I just got, when Iger came back in, that's when I was like, no, I'm hitting the sell button. I'm done with this stock because I don't want more of Iger. I wanted fresh blood. I think more of Iger was a mistake. A lot of people applauded that day. We're like $5 when Iger returned for the next couple of years. I believe I sold it right into that. I sold it somewhere right around there. It might have been the day after, but right into that because I was just too nervous about it. So I think that they need to figure it out. There's a lot of issues here. We know the whole woke thing as well is weighing down on the stock too. So many issues with Disney. The parks were always firing on all cylinders, keep giving them those earnings. And now they're not doing as good as they possibly could. I think Disney is a no touch for me until they start showing me signs they can turn the story around.
I drew this line here. I updated it on September 9th of 23. I was talking about it being the monthly support. Next stop for it being 80. We're already there now. And on that same day, I was calling an outlook that potentially I see Disney maybe going to $50. I can still see that, guys. I still see that.
It's hard to see it at $50 because the franchise, you're talking about 8-9 year lows here. You got to think they'll eventually figure it out. 80 is fantastic support. This is the COVID lows we're at. So we have to respect that too. You're at major support. If you think they can eventually figure it out, it's a screaming buy here, but I don't know if they can figure it out in the short term, and I'm not so sure. So I'm not buying it here yet. But it is still on the long-term shopping list. But I'm out for now. It's watched. It's being watched. They got to show me signs of turning this around. We got to see what they can do with ESPN. The Fox acquisition we know was a disaster. They brought in all that debt, which is what's weighing on the stock here now. And you think about the debt and the interest rate costs, and obviously, there's a lot of, let's just look. Maybe it's a good exercise. We haven't done that. Go to the details in your pro. You can do it here with me if you want, Mitch.
Yeah, let's
go
into
into Disney. Look at the debt. I'm sure it's an extreme amount of debt in this company here. Trying to go grab it. Debt, long-term debt. 44.5 billion dollars. That's debt. That was 1% interest rates or 2% interest rates. That's now 6 or 7% interest rates. Servicing that debt is going to be an issue. I think it's an exercise. If we think interest rates are going to stay up at this area here for the foreseeable future, not coming down quickly, and that's what I'm thinking is going to happen. Companies with a lot of debt have to service that debt. Disney's problem is it took on a lot of debt with that Fox acquisition. It's got a hell of a lot of debt. They're talking about getting giving the dividend back, but with what money? I mean, there is issues here. It's too many issues and too much debt for me to get too excited about this stock. Maybe they eventually figure it out. I'm going to wait until I start seeing signs of them figuring it out.
Of course, we talk about stocks that are in play that day. That's exactly what we've been talking about. And so keep your eyes on it. And if you're just joining here, Art, scan back, rewind that. You'll be able to catch a lot of the conversation from earlier. Let's wrap it up here. Dennis, any last outlook for the market?
Chop, sideways, chop.
Chop.
So how do you play that? We'll say it again. You get these 3-4% rippers. You're probably selling into it. You get these 3-4% sell-offs. Maybe you're buying into it. Obviously, have your shopping list. Pick your right stocks because Disney's not rallying on the rallies and it's selling off on the sell-offs. I mean, just not the type of trading action that's indicative of a bottom.
That's for certain. Thank you for, like always, Dennis, you joining us and bringing a little bit of Detroit love in today. And show up the shirt one more time for the fans back
Go
home.
Lions.
Go Lions. Go Lions.
Super Bowl, baby. Here we come. Yeah.
We'll see about that one. Have a good one, Dennis.
Have
Take
our
care.
day. We're having our day in the sun.
Hey, enjoy it. Enjoy that weekend and have a great one, guys. Like always, we'll be continuing here with live trading. That's coming up next. Then at the end of the day, we got Start Swing Trade. Like always, we got a lot more for you guys right here on Benzinga. Smash those thumbs up if you guys enjoyed today's show. Let's get to the trading action. Don't worry, Joel will be back, man. Trust me, he will be back. But I can't tell you where he is. Shh, I might get hurt. All right, I'll see you guys like always. Hit the like button. I will see you guys back here on Monday, but stick around for some live trading action. You don't got to go anywhere. Let's see if I can get into the green today.